said for that, but I just think also our approach to lockdowns and our approach to healthcare weren't very good. I mean, to be fair, they weren't that good in the States either. So you could make that argument there. But yeah, I just feel that there's some real issues that are Brexit related, London related, and I think there's some real challenges this economy faces. So it's yeah, of course, there's a bit of cash in bank accounts. That's going to help. But I think across the board, our general sort of governance, our performance of the government, I just think it was poor. And I think that adds to the reason to be negative, particularly when everyone's bullish, as I said.
How bad would a no-deal Brexit now be? It does seem as if you could put a very thin piece of paper between a deal or no deal. Manufacturing would certainly suffer, one of the areas that has actually stood up during the COVID crackdown. How bad would it be? The Bank of England is suggesting that it could actually be even worse in terms of its impact than COVID.
Well, I think there's some real challenges short term. Yes, you'll get all those queues, they'll get the paperwork. What will happen to the financial services sector? I mean, that already looks slightly out there, and a lot of uncertainty as to how that's going to pan out between the equivalence or non-equivalence debate, so to speak, between the City of London and European financial services. And I think with queues at the ports and struggling in terms of supply chains and challenges for a financial services sector in a no-deal Brexit, I think it would be a real issue for this economy over the course of the next 6 to 12 months. So that's clearly a very UK-specific risk that's pretty meaningful. I mean, of course, it has some knock-on effects on the Eurozone as well, but primarily it's a risk for this economy. So, yeah, I think it could be quite serious.
Chris, on that note, we will leave it. Thank you very much indeed for your input today. Chris Watling of Longview Economics. We're just getting some numbers through from Andrew Cuomo, stateside New York, reporting 6,933 new positive cases. That being tweeted out just a moment ago. That's a pickup of around 1,000 versus yesterday. New cases for the first time picking up really quite sharply now. Hospitalizations now above 3,000. What do we got coming up for you? A brewing diplomatic spat over skiing. The German Chancellor Angela Merkel pushing for European ski resorts to be shut down this winter due to the pandemic. Not everybody's on board. We're going downhill fast next. This is Bloomberg.
We have some good news in terms of vaccines and a chance to overcome the health crisis, but we are not there yet.
We need the fiscal stimulus, and we need it relatively quickly, because I can see where the second wave's coming. You can see consumer spending beginning to get impacted again.
What we need surveillance to be stronger. We need public health measures, because you have no other way at the beginning. This is your best weapon, and you need to use it well.
The good news is that both the vaccines and the therapeutics, in particular the antibodies, are coming along and will start to bring that number way down.
We don't just need more investment in public health. We must also rethink how we value health.
I do believe a targeted fiscal stimulus is going to be in order to really begin a more equalized economy.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Live from London, I'm Guy Johnson. This is Bloomberg Markets. So a diplomatic spat over European ski resorts is now brewing. The German Chancellor Angela Merkel basically says they should all be shut down for the time being this winter to rein in the virus outbreak on the continent. Joining us now from Brussels is Bloomberg's Maria Tadeo. Not everybody agrees. How big an issue is this?
Well, they don't agree, and Guy, this would almost seem like a sketch. It would almost seem like a parody in the midst of a pandemic. We are debating whether or not to go skiing, but it is becoming an issue between 4 countries. That's Germany, Austria, Italy, and France. Now, the Germans, as you pointed out, they've made it clear they believe resorts should not be operational this year. Angela Merkel does believe that we could see a third wave after the Christmas holidays, and she's also pointed out that one of the lessons we should take from the summer is that opening up too much and too quickly is problematic. However, the Austrians say that they do not fully agree with this. They have taken the measures and they want to open. They also signal that if you are a resort and you're not able to open up this year, you're not able to actually do a normal season, you're going to turn to the state, and ultimately it's the government that's going to have to pay for this. It's also leading, Guy, to some surreal regulation coming out of European governments. Today, the French government said that they would go ahead and open, but just to give you an idea, the cable car that takes you top of the mountain, that would not be able to be operational as usual because it means too many people in a closed space. So it does have potential to run into a diplomatic issue. If one country decides to open, the neighbor says they don't want to open, but also it's just some of the surreal regulation that is coming out of this. It's also very difficult for people to follow, frankly.
Yeah. Okay, if you tell it, Mark, but for everybody else, probably not so good. Maria, I just want to turn to a more serious issue. This is serious, but there are more serious issues that Brussels faces right now. We are starting to get some comments coming through from Viktor Orban out of Hungary. Hungary won't accept the EU plan that Poland doesn't accept. There is commonality between Hungary and Poland, apparently. They've signed a joint statement on the EU budget. They are aligning their positions, saying as well that the EU must separate the rule of law debate from the spending plan. How does this get resolved? Because at the moment, the 7-year budget plus the attached rescue plan is going nowhere.
Yeah, it's going nowhere. And Guy, that December 10th meeting, it's looking harder and more complicated by the day. There's a lot of issues that European leaders will have to deal on that day. Now you're looking at a potential veto on the recovery fund, on the European budget. This is extremely, extremely problematic for the Italians and for the Spanish. They've made it clear yesterday to those 2 countries that they do want to see this recovery fund operational by January. Now, how do you solve this? It's difficult because Poland and Hungary are simply restating positions that they already said they have, that they want to see a separation between the funding and the rule of law, that they see one as just being purely economical and the other one is about politics and ideology. They don't agree with this liberal view of the world. But for the European Union, it's very tricky to separate the 2 of them, but also for countries, particularly like Mark Rutte, like the Netherlands, the very liberal democracies of Europe. They've made it clear they're not paying a cent if this money is going unchecked to Viktor Orban. Now, ultimately, perhaps this comes down to Angela Merkel and the EPP party, but at this stage, it's very difficult to see how you cut a compromise right now. The 2 sides are very far apart.
You wonder what the plan B is. We may find out after the meeting on the 10th, as you say. Maria, thank you very much indeed. Bloomberg's Maria Tadeo. Coming up, we'll talk more about what is happening with the ECB. The ECB stimulus plan luring investors into Eurozone corporate credit. We'll talk about also the accounts today that were delivered and those comments that came through from Peter Lane. Peter Chatwell, Mizuho Head of Multi-Asset Strategy, is going to be joining us next. This is Bloomberg.
our interconnected world, if people in low and middle income countries miss out on vaccines, the virus will continue to spread and the economic recovery globally will be delayed. Equitable access is in the national interest of each and every country.
But this also means if we have a vaccine, we should have a common approach to give a fair share to everyone so that the most vulnerable groups, the frontline workers and the healthcare workers, for example, are the ones who get the vaccine first.
We're donating another $70 million to fight COVID-19. $50 million of that will be for buying vaccine doses for low-income countries, and another $20 million will be for researching even further and new vaccines altogether.
Il nous faut nous assurer que les conditions réglementaires et politiques sont toutes réunies pour un accès le plus large et rapide possible à ces produits, tout en respectant les standards internationaux de qualité. C'est pourquoi la France propose que puisse être rapidement adoptée une charte d'ACTA qui réaffirme ces grands principes. Partager la connaissance, soutenir les systèmes de santé, avoir des produits rapidement accessibles et abordables.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
We explore the trends, investments and competition of the European ETF industry. Join us on Bloomberg ETF IQ Europe.
Live from London, I'm Guy Johnson. This is Bloomberg Markets. Happy Thanksgiving. So, European credit markets are striking an upbeat note today on rising optimism that the end of the pandemic is in sight. Risk gauges for both the investment grade and high yield debt are retreating. We'll continue with the spread compression. Peter Chatwell-Mizuho, head of multi-asset strategy, joining us now. Peter, let's talk about the sustainability of this move. It's interesting. So over the last few days, we've seen Carnival be able to come to market and raise money unencumbered. It was able to do it without having to put ships up as collateral. Lufthansa was in the market as well, raising money and doing relatively well. I'm wondering whether or not you think that these are sustainable trends and you worry that the kind of the long, hard winter we're all facing could undermine them.
The way I see it is the vaccine was the key turning point here. That means the prospect of societal normalization in time for summer of next year is very high. So that means that the COVID-afflicted sectors, such as Carnival, such as Lufthansa, they really do have the opportunity to get back to some sort of normality on their top lines. But what we then need to see and really assess over the course of at least the first half of next year is these accommodative financial conditions. Are they going to be used correctly? Are they going to be used for balance sheet repair? Or is it just going to be a case of loading up on more debt? If it's the latter, then what we'll have is a rally in the first half of next year, but then it will stall out. What we think is that there is going to be a significant amount of balance sheet repair, and that is going to mean that credit markets can continue their outperformance of equity markets, and then they'll go and reach the tightest spread since the great financial crisis.
In terms of the danger around that thesis, a lot of companies, as you say, have raised an awful lot of money already, and there is this fear that if the economy doesn't pick up sharply enough, that balance sheet repair will not be viable, and as a result of which these companies are not really going to be able to cover their costs on the credit side. How big a threat is that, and how granular are you going to need to become in terms of picking individual credits and working out kind of who is going to be able to manage it and who isn't?
That's a super question. And I think the ECB will have a major role to play in assessing the type of financial conditions that they're creating and whether or not it's turning to be problematic, whether or not the incentive structure is incorrect. Now, it will mean the value in real detailed digging and analysis of a corporate balance sheet comes right to the surface. That's going to be where the alpha generation is next year. And I think there's going to be a lot of performance from beta if our thesis is right, but really to add alpha to that, fundamental credit analysis is going to be super important next year.
Okay, so where do you see the areas that you want to be? Get granular for me, both at a sector level and maybe even down to individual credits, because there is a lot to choose from out there, and it's pretty clear that COVID has accelerated a bunch of trends that are going to have a meaningful impact on business models.
Well, if I look at the risks that are facing us now for next year, I have to say that COVID is not one of those, or it's just a small component of that. And I have that feeling of confidence because of the vaccines. And really the only risk I see, which could have COVID coming back onto the radar, is if vaccines are not accepted by society, if there's a big anti-vaccine movement. Otherwise, the main risk factors I see are actually about geopolitics, about the possibility that corporates don't do the right thing and repair balance sheets. And so actually, I feel very comfortable in picking the COVID-afflicted sectors. So let's take airlines as an example. I think that the recovery for those will continue. And so I like those sort of themes, and I would recommend long in the COVID-afflicted sectors and names, and then I would recommend doing those positions, being long those positions against the low betas, looking for continued spread compression. And I think that's going to be a theme for the first half of next year. It's just had about a month of really good performance. I think it's got a long way to go yet, probably 6 months.
Well, let's just stay with this theme then and think about what is going to happen. One thing that COVID has changed is businesses' appreciation of how many times they need to put their people on the road. Airlines make traditionally a lot of their money at the front end of the plane, particularly those that cater on the North Atlantic, for instance. And even if we see 20 to 30% of that business disappearing, that is going to have a massive impact on the ability of these businesses to make money. How does that factor in? The pandemic has changed a lot of behavior, and some of that behavioral change is going to stick.
Indeed. When we've done our analysis, we have not assumed a normalization of top line for the afflicted sectors at all during 2021. What we've done is we've looked at their revenue paths, and we've assumed that we've forecasted a revenue path based on our macroeconomic assumptions and forecasts, which doesn't see their revenues getting back to normal towards 2023 for some of the afflicted sectors. And taking that into account and looking at where they can raise debt, where they can issue equity if they choose to, that's how we still come to this picture of outperformance for many of these sectors. Really, we're looking at probably the lowest risk ones as being the best value right now on a market neutral basis.
Peter, talking to people I know in sales before the crisis, they were flagging to me that some of the stuff that was going out of the door, the covenants that were attached to them were really not designed to provide really that much protection to investors. Very, very light covenants being applied. And I wonder, as we go through a kind of rolling period in which defaults may not spike as they traditionally have done, but just continue at a more elevated level, which is, I have to say, probably looking more and more likely. How protected are investors going to be in terms of recovery rates? What do you see recovery rates looking like?
Well, so far, recovery rates have really surprised to the downside. And I think that's the point you make there is extremely valid. And it's why doing your full fundamental and legal research on the higher risk names is absolutely crucial here. So the way I think next year is going to pan out is that there is going to be this selection process whereby if you are not overly financially engineered, haven't issued these covenant-like structures and simply trading at a wide premium because of the sector you're in, or you've lost an IG rating, have gone into crossover or slightly wider into high yield, but you're still viable once society normalizes, then those are the businesses, those are the names which are going to perform, I think, really in quite a powerful way first half of next year. But we're still going to have this backdrop in the weaker names, in the triple C kind of area, where there is still going to be a lot of risk, and we're still going to be realizing quite elevated default rates with quite low recoveries. And I think that's just a fact. But don't forget the amount of investors there are with very deep pockets that are going to be chasing returns, and particularly in European fixed income, because the story for next year is not just about the return to relatively normal spreads for much of the credit market, but it's also about the cyclical recovery in many currencies, the euro being a key one for that. So as the euro appreciates, more and more investors are going to be coming into European assets. And that's going to mean the wall of liquidity, which has been chasing European assets in the past 6 months, is going to be growing. So we may well have a degree of mispricing actually developing over the course of next year.
Tighter spreads to come. Peter, thank you very much indeed. Peter Chatwell of Mizuho. What have we got coming up for you now? AstraZeneca and Oxford facing mounting questions over their COVID-19 vaccine candidates after acknowledging a manufacturing error. We're going to talk more about this next. This is Bloomberg.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Are you worried that people won't take the vaccine?
We remain concerned about vaccine hesitancy.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here?
It's a huge market, it's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
Our generation's biggest problem.
Climate change is happening.
And the world's most innovative solutions.
Transport, industry, buildings, electricity, all of those things.
Everything you need to know about our changing environment, the politics of global warming.
We can and we will deal with climate change.
In the fight against climate change, Bloomberg Green has you covered.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Hi from London, I'm Guy Johnson. This is Bloomberg Markets. Happy Thanksgiving. Let's check in on the Bloomberg First Word News. The coronavirus resurgence is making it an unhappy Thanksgiving for many in New York. Almost 7,000 cases reported in the last day, and hospitalizations are now over 3,000. In the United Kingdom, London will avoid the toughest coronavirus restrictions when England's partial lockdown ends next week. The city has been placed in Tier 2. That means that pubs, restaurants and bars can open for business, but alcohol can only be served as part of a meal. Households will not be able to mix indoors. And the Trump administration is considering a move that could boost transatlantic travel. Several agencies have urged the White House to lift an entry ban on non-US citizens arriving from Europe. It was put in place to slow the spread of the coronavirus, but the ban has caused big losses for airlines in the formerly lucrative transatlantic market. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. Let's stick with the virus and vaccine development. Development questions mounting over AstraZeneca and Oxford's vaccine candidate after they acknowledged a manufacturing error that affected trial results. Joining me now with more from London, Sam Fazeli, Bloomberg Intelligence Senior Pharmaceuticals Analyst and Director of EMEA Research. I'll get that out. Sam, save me. Who messed up here?
Somewhere between the Oxford vaccine group and the manufacturer, which obviously involves the people who make the viral doses and then fill and finish them. Somewhere in that group, somewhere, somehow, possibly involving the clinical trials organization, if there was one involved, that's where it's gone wrong. What is nice to know, I think that's what we know, is that it wasn't like a batch was made and then it was only half active. They literally gave people a vial which had half the dose in it. If it was that issue with the half active, then that's a bit more concerning. But I don't think that's the case. So Astra, I don't think, can really be thought of as anyone as really that guilty here.
And in some ways, this was serendipity. It allowed a higher efficacy rate to be generated. How will this problem with the dosing, do you think, affect acceptance of the vaccine? There was much criticism earlier on this week from the United States, some suggesting that it wouldn't be given approval there.
Yeah, so I'm not going to go as far as you have. This hasn't proven anything. Once you know much more about that group of people who apparently gave you 90%, I'm choosing my words very carefully here, apparently gave you 90% efficacy, then we can start deciding whether it was the half dose, full dose thing that drove it, or whether it was because there were younger patients, because there were healthier patients, or because we just didn't have enough numbers in that group. So that's where I think we have something that we still have to figure out, which is why I suspect there's all this question marks, not just from the US. I think from the get-go we were also skeptical.
So what needs to happen? How does this need fixing? How does it get fixed? And how does it get put right?
Right. So this combined group of Brazil and the UK trial had up to about 23,000 people in it. What we can do is get to the end of it, subtract the half-dose, full-dose people, and go to what the trial was designed to test, which was, in fact, the opposite hypothesis, high dose followed by low dose, and also two high doses, and see what that tells us. And then see if this other group has any other reasons to explain the 90%. If it does, you go back and redesign another trial and test that. You can't run away assuming that half dose plus full dose is what we should give people. You can't make that decision for 2 billion people on the basis of a 3,000 patient outcome.
In terms of why this is important and to get an idea of the scale, how much of the world is relying on this type of vaccine, the J&J vaccine, as opposed to how much of the world is likely to rely on the newer mRNA vaccine, which has the issue of of stability and temperature?
Yeah, so I've said this a few times, Guy, and I probably said it to you on your show as well. You know, we put satellites into the sky and put people on the moon and exchange amazing things with the International Space Station. I'm sure we can solve the logistic problems of shipping something at -70 and -20 if we put our mind to it. The Ebola vaccine needed those kind of temperatures, except that they were given to far fewer people, but still they managed it in the Congo. So I'm sure it's doable. The point is, obviously, we all need less. It would be much easier to have a vaccine you can just put in your pocket and take around. So today, the United States has sufficient doses contracted with Moderna and Pfizer to cover its population and more. The UK and the European Union and the rest of the world are currently dependent on the Astra vaccine. So that needs to get sorted out. But in due course, we'll get news from Johnson & Johnson, and we'll get news from Novavax, and find out whether those vaccines are, how effective they are. And once we have that, we can start thinking about how quickly UK, Europe can open versus United States versus elsewhere.
Yeah, it's going to have critical economic impact. Sam, always appreciate your time. Thanks for joining us. Sam Fazeli of Bloomberg Intelligence. This is Bloomberg.
Their CPG history, their experience, and really how we might be able to combine together to really create this fantastic public company. And so we kind of got into the SPAC thing a little bit before it became such a hot method of going public.
Live from London, I'm Guy Johnson. This is Bloomberg Markets. Time now for a Bloomberg Business Flash, which is a look at some of the biggest business stories in the news right now. Let's start with Disney, which has announced 4,000 more job cuts after virus lockdowns forced the closures of its theme parks. That takes the number of layoffs set for the next 6 months of next year to 32,000. That's more than 10% of its workforce. The coronavirus pandemic has hammered Disney's traditional businesses, of course, like studios, parks, and cruises. The Spanish oil producer Repsol is going green. The company says it intends to wind down the search for oil and expand its renewable capacity by 5-fold in the next decade. Repsol was the first major oil company to set a net zero emissions target. It did so a year ago. And the second largest mall in the United States is getting its first big test starting tomorrow on Black Friday. The $5 billion American Dream Complex opened its retail stores last month. Timing is, well, less than perfect, though. The coronavirus pandemic has driven more shopping online, of course. Plus, the American Dream is built around experiences. Its indoor ski slopes and water park, well, they no longer hold. the same appeal. And that's your Bloomberg Business Flash. Nice to go skiing. Looks like we're not going to see much of that in Europe, at least for a while. Let's turn now our attention to what is happening in the real estate market. I guess it's a linked theme. The amount of construction on new office space in central London has plunged. The figure halved in the 6 months through to September, according to Deloitte. Here with a look at this commercial market is Bloomberg's Danny Berger.
Guy, we know that a lot of companies have really been turning in and giving up a lot of their office space with more workers cocooned at home. But what's starting to emerge because of the coronavirus is this very strange bifurcation of the London real estate market. And this is really a global trend as well. But what's occurring is because there's so many yield-hungry investors out there, real estate is, of course, a great place for that. Anything that can still command high rent, it's seen its value grow. At the same time, older office space has seen its value lessen. So we're getting more of a divergence in these different markets. And it's turned real estate into a market that's really all about quality. You can't just really buy any more undervalued property thinking you're going to get a good return on that, because workers won't necessarily come back to